Well, this year sure started off with a bang. Holy cow. We thought last year was going to be a busier record year for price points. It looks like this year is going to try and top last year in terms of interest in the market. It's been interesting out there to say the least. A lot of great feedback from our renewal episode. Eddie's episode down in the US had some great connections with some folks that were looking to get financed down there. And man, the conversations right now are so interesting. Obviously, where price is going, where rates going, what's happening, and so we decided to devote an episode right now to just topics, things that are happening right now, what's going on. Are investors the reasons that prices are going up? Do we see prices going down? Are rates going here, going there? I mean, this isn't just a rate conversation, but this is more of an inventory conversation. What's happening in the marketplace? Why are prices changing? And just an overall open discussion, which was quite fun, something different. We haven't done a lot of these types of episodes in the past. So hope you guys are liking it. We'd love to hear your feedback, opinions, thoughts on the marketplace. It's an open conversation. We'd love to know what you're thinking about doing in the next year, and if you think that things are going to continue at this torrid pace or not. You know, I just looked up at our iTunes account and I noticed that we had 70 reviews on Apple Podcasts. So I'm so proud and so pumped. Just over 100 episodes. That means we got almost one review for every episode that we've done, which is unbelievable. If you're one of those hundreds and hundreds of listeners that we get every single episode, I wish that you would just jump on iTunes, on Apple Podcasts, and just leave us that 5-star review if you can. Another thing that would be really helpful for us is if you share our podcast out. You can do it on Spotify, super easy, just on your Instagram, your Facebook page, tag us, whatever you'd like. Means the world. Again, we did this out of our own time to make sure that you guys are fully educated. If you're loving the show, again, and you want to work with us or find out more about creating wealth in real estate or just working on your existing mortgage situation, easy way to get in touch is go to our website at thrivemortgage.ca. And if you want to connect to us on Instagram, you can connect to our company account at Thrive Mortgage or at the YVR REMO show on Instagram. Anyways, this should be a fun episode. Let us know what you think. Drop the feedback on the feedback channels as already mentioned. We look forward to seeing you guys on the other side. What's up, guys? You are listening to the YVR REMO show, where we talk all things Vancouver real estate and mortgages, take boring topics and make them interesting. Make sure to stay tuned to listen to everything you need to know how to put cash back in your pocket, create wealth in real estate, and simplify the complicated. All right, guys. Well, we're on officially episode 101 and excited to have you here today. Today's episode is going to be a little bit different. It is going to be somewhat dated, but at the end of the day, it's a conversation we have to have. And it's a conversation we've been having for the better part of a year and a half, 2 years now. And it's about real estate price points, who's buying real estate, what's going on, issues with inventory, government intervention, so much. And so we've kind of taken a whole series of issues from, as I mentioned, the inventory to house prices to reasons why prices are going on, to where do investors fit in this picture, or first-time buyers, as well as proposed changes. We put it all together in a little package here today, and we're just going to kind of give you some feedback on some of the things that we've seen, we're seeing, and some thoughts on potential solutions. Of course, a lot of this information has been reviewed and researched from our end, reading through, but a lot of it's just firsthand summary and a feeling. So I want to be really open and transparent and say to everybody listening here today, a lot of this is just our thoughts, our feelings on what's happening based on the information that we know, we see, and seeing literally hundreds and hundreds of applications every single month and having many conversations with people in the industry. So, I think probably no better place to start off right now than just kind of talking a little bit about where we're at right now in 2022 as it pertains to housing prices. And again, not a big surprise here, but just like some information regarding some of the statistics across the country. I know, Dean, we were just looking at an interesting stat there, or not stat, but a series of statistics that showed us the percentage of price increases across the country, not just BC. Again, a lot of people just think about Vancouver and these areas, but not just BC. And some of the areas that had a little bit surprised us that we were seeing some price gains and maybe some conversations on what's happening there.
I found that really interesting, especially because the media really pushes the fact that Ontario, BC, these two provinces are like really hot topics in the real estate discussion when it comes to media. And that is true. I mean, we have been hotter than ever, but what surprised me is actually the rest of the country has been really hot too. And in some cases hotter. Other provinces are quite, arguably hotter in almost double digits than BC. So that was really surprising. And the one that really stuck out to me was the province of Manitoba. Where there are cities and municipalities throughout Manitoba that are seeing 48% increase in 12 months in pricing, which to me is just, that blew me away. I'm not familiar with that market whatsoever. So to see those stats was really surprising. And furthermore, the Alberta and Saskatchewan kind of seem to be the two outliers that just aren't seeing that uptick. Those are the two provinces that, I guess the rest of the country is kind of getting lumped into. Oh, there's not that much appreciation. The activity is not as high as Ontario, BC, but it's really just isolated to those two provinces. The rest of the country is on fire.
To Dean's point, it's really interesting to kind of see some of the areas and locations that we never would have seen in the past or thought about in the past that are actually, as you mentioned, just blowing up, like Manitoba. Does anybody ever talk about Manitoba? What's going on there? Why are people moving to Manitoba? Why are price points going up in places like that? Conversely speaking, why is Alberta, or up until December of 2021, why was Calgary and most of Alberta and Saskatchewan in such a funk? I mean, there's a lot of conversations. We hopefully can bring somebody on from Alberta to talk a little bit about why they're anticipating some major growth this year. But it's just interesting to see that there are places outside of BC, outside of Ontario, such as the Maritimes, such as Manitoba, that are absolutely on fire as well. It's not just the West Coast and the center of Canada.
I was just going to say that I know a big point, like from my personal conversations, is Alberta did pick up a little bit in 2021, more than it has the previous 4 years. And I mean, we personally have had a lot of clients that are looking to invest, and their qualification doesn't allow them to get a good cash flowing rental property locally here, right? Like they're limited to maybe an older condo building where you're running into strata issues. So instead of investing locally, people are starting to do their research outside of the Lower Mainland and invest into these other markets like Calgary and Manitoba and Winnipeg. So I do know for a fact that qualification is driving some of that. You're just getting a totally different type of investment property outside of the Lower Mainland.
Investing, especially when it comes to investing in a rental property, the focus shouldn't be appreciation. This has been the cherry on top over the last 12 months in a big way. But like the focus really, and why a lot of people choose Alberta specifically is for cash flow reasons and sustainability and just honestly predictability. Like going back 5 years, there really hasn't been much of an improvement there. It just seems to be very consistent, which for an investor can be very comforting to know what you're getting into and have really clear predictability, and just going into it with, hey, the cash flow is king focus there.
I would say, like, in addition to that, it's interesting to look at the different markets. And we won't spend too much time on this, but it's interesting to look at the different markets here. Like, for example, in BC, if you're someone in BC listening to this, in British Columbia, Vancouver Island, I would suggest, is probably more fueled by people actually moving, relocating. The Maritimes could possibly be the same, maybe a little bit less on the investor front because of the affordability previously. Whereas to your point, Dean, in some of those other cities or areas or locations, it could be a lot more investor driven. Really interesting to say. And that kind of leads us into our next point. So we're going to talk a little bit later about the proposed CMHC changes when it comes to investment-based financing in Canada and what that could look like. But for now, just a quick little comment maybe on what's going on, and maybe we'll come back to inventory. I think that's a conversation we can touch on afterwards. What's going on in the city planning, what's driving it. But a big topic or a big conversation that's been up in the news a lot lately is around real estate investors and particularly speculators causing a lot of the increases in price points and taking up a much higher or larger percentage of people who are buying real estate in general. So, guys, I want to do a little roundtable and talk a little bit more about why that could be, what we're seeing, and then we'll transition that into the potential rules and restrictions that CMHC is proposing and what that could look like.
I mean, it's a great point, and I definitely think that it's something to consider. I mean, there was a development in Aldergrove that I think had 71 or 73 units, and there were 1,250 people that had put their name in to try to purchase in this smallish development. And, I can guarantee that those were not all first-time buyers or people to actually looking to live in those properties. When you look at what real estate's done, even in the last 12 months, let alone the last 10 years, it's a massive investment, right? Like, it's a great, solid investment. you can make millions of dollars in real estate if you invest properly. And I think people are really starting to catch on to that. And with house prices doing what they're doing, if you're in the market, your house is appreciated. You have access to, maybe a couple $100,000 that you might not have if you weren't in the market. And people are starting to realize that they can access that equity and make it work for them, and they can invest into another property, right? If you've seen the benefits of one property, maybe your primary residence, just think about duplicating that, right? Now you have two properties that are appreciating and someone's paying your mortgage down, and maybe you have some cash flow. So I think it's just become more and more common that, there's more education. Like, we're doing a podcast every single week, right? Trying to educate people on real estate and how strong of an investment it can be and how you can use the equity in your home. And I think people are just really starting to catch on to that and trying to, create more wealth out of real estate.
Is that driving house prices? Is that pushing up house prices? Because the media is always looking for someone to be, the bad guy, so to speak. And, all the articles that have come out in the last 7 to 10 days. So again, I'm sorry to date the episode, but whatever. All the articles that have been coming out in January 2022 have been around investors fueling in the market. And when they talk about speculating, typically, Dean made a point earlier in the podcast here already that they're looking for appreciation. They're not really fully comprehending all the other advantages, or maybe they do, but they just don't care. They're looking to just make a quick buck and purchase and sell. How do you guys feel about that being the reason that we're seeing house prices go the way they are?
Well, I don't think there's really any proof that, investors are just buying for the purpose of selling. A lot of the investors we work with, I'd say almost all of them, are purchasing for rental. The purpose is to rent it out. And for me, I have a hard time really believing in this theory that the investors are driving this market, because the rental market is awful to deal with right now. There is nothing for rent. The inventory issues are funneling right down to the rental market. So when you jump on Craigslist to go rent a 2-bedroom condo in Langley, as an example, there's lineups of 30 people just to rent. So we're seeing the exact same activity in the rental market as the purchase market. And I know what I paid for a 2-bedroom, 2-bath apartment when I was renting 10 years ago. It's insanely higher. It's seen just incredible increases on the rental rate. So for me, it's like, why are we targeting investors that are actually helping supply for renters? Real estate is unaffordable. And again, we just keep circling around the issue, and the media doesn't want to touch on it, but it's an inventory issue where, it comes back to inventory and the fact that there's issues with inventory. And why is that? That's something we haven't touched on yet in this episode, but we have our thoughts, and I'd love to dive into that.
Well, I've got a couple thoughts on that too. So we did just touch on the fact that more people are investing in real estate than ever before, but I do agree with you. It's not likely the primary reason as to why house prices are continuing to increase at the rate that they're increasing. Obviously, one of the contributing factors. What I will mention, so a couple things I would suggest to be true, because we've seen some of the statistics. Since 2014, we went from home buyers over the course of the year. Investors had 18% market share in 2014. And then 2021, or the most recent study that was published, we're up to 20% market share. So a much larger percentage of people are buying properties as an investment. Again, that's a very small margin. However, it's an interesting topic to talk about. And if that is the case, why is that the case? And why is that a good thing? And again, I don't think that's the reason that we're seeing prices go up the way they are. But it's a good conversation to have. Is it a part of the big picture there? A couple thoughts here really quickly on that, and transitioning over to Derek, who has a few thoughts on this piece as well, which, looking at why people are investing more now than ever, freedom of information, education is obviously really key. People are listening to podcasts like ours and many other, bigger ones in the US, like Bigger Pockets and so forth, who talk a lot about the opportunities that investing can help. There's industries of investment properties, meaning, there's people out there who essentially get paid to either find these properties and go out there and help people buy them or teach people. It's an industry, right? In the US, much bigger than Canada. And I think it's just starting to get to the point where in Canada, people are just starting to recognize the opportunity. So I think there's a level of that. The other consideration in my mind, and this is probably speaking to a bigger picture, I think people have had enough, and a newer generation is absolutely sick of the previous ways of getting absolutely hosed. I know I'm Canadian here, but getting hosed by the banks. And I think a big part of that is people, don't feel as confident or as comfortable in just giving their money over to, their financial planner at one of the big banks and saying, here, go make me some money. They've seen what happened in 2008. They've seen, the fees that they're paying, and they're saying, you know what, maybe I'm going to pay some fees in real estate, but at least I'm in control of my own destiny. And I know for myself, that's a big part of the picture here. I do invest outside as well, but that's a massive consideration. Again, there's quite a few more, but just, those are some thoughts on why I think we're seeing, even though it's not fueling the market completely, I think those are some of the reasons that we're starting to see investors take up a larger market share.
Yeah, I couldn't agree more. I think you hit the nail on the head there. I was just looking at a stat, which is kind of interesting. So for 2021 as a whole, there were 666,995 residential property sales based on MLS, which is up 20% from 2020. So as much as across the board, pretty well, other than a couple isolated provinces, values have been increasing dramatically. There's probably inventory issues across the board. There were a lot more transactions, right? So it's interesting to tie this all together, because where is this all coming from, right? Like, where is this big spike coming from? Is it immigration? Where are all the people coming from, right? And I think that ties back into the investor piece. I mean, it is a small portion. It's 19-20% of overall transactions. But when you look at 670,000 transactions, it's a fair amount of people that are investing in real estate.
We need those investors as a rental market. We need more rental property. So as much as we're going to now target them from a federal perspective, the federal government's going to target this sector of the real estate industry. It doesn't really make sense. Like we're still going to have issues in the rental market. If anything, that's going to make the rental market even worse than it is now, and it's not good. It's not in a good position. It's very difficult to rent a property right now, and that's a bad thing. So why would we go make that worse as well? Like, I think just looking at solutions is more important than just constantly. I don't know. It just seems like there's not a lot of thought here.
Let's talk a little bit about what the plans are, what they're trying to do, and then we can transition into the potential rule changes, and of course, where do first-time buyers fit in this whole picture here as well, and what does that look like? A couple considerations here. The government is proposing making changes to the people's ability to qualify for investment-based loans, which means a loan on a property where you are essentially buying it for the purpose of investing. Now, one thing to your point, Dean, one thought here, because I had a pretty interesting conversation this week with someone who's in the know and talks to a lot of people, and her feedback to me was that, the government is looking at it as we have not enough supply, in part because they're not building enough purpose-built rentals, which I don't know the stats around that, so I can't speak to how many purpose-built rentals we have relative to other populations and what's out there, but there's obviously some consideration that should be had. That being said, I know close to home here in Langley City, I've seen tons of purpose-built rentals come up in the last few years. And generally speaking, I guess I've never lived in one, so I can't speak to it. Beautiful properties. The price points for those properties seem to be at the top end of the market price points, and they don't seem to be any better after speaking to one of my tenants right now who lived in one. So is that the answer, really? I don't think so. Maybe helpful when it comes to supply, to your point. Maybe there's less people having to struggle to get into a rental property, which is obviously a major concern. However, I don't know if that is the answer. Anyhow, playing devil's advocate, let's talk a little bit about that potential change, because we've been teasing people for a while here on that and some of our thoughts going forward. So just so everyone knows what's going on, there have been a lot of changes based on the government's guidelines and CMHC rules in the last 15 years around the ability to buy investment properties. In 2007, you could go buy a 1 to 4 unit rental property, in some cases for basically 0% down. I think back in 2007, you could buy one and essentially do a borrowed down payment and buy a 4 unit property, which is wild. And you could qualify with 100% of the rental income. So we're investors back then, or anybody who invested back then, those people were doing quite well for themselves as far as finding properties are concerned. But, looking at things today and where we're at, not the case. 2016, I believe, CMHC made changes to the rules and said, we're no longer insuring any investment-based mortgages. And for a couple of years after that, we saw, at least from my experience, a little bit of a dip of people buying real estate while lenders were trying to figure out what options were available and took a huge step back, as well as people who were investors also, or maybe who were on the borderline,
step back too, because either they couldn't qualify or they didn't feel as good about moving forward with an investment property. So some of the rules that are being suggested are the following: potentially increasing down payments from anywhere between 25 to 35%. Right now they're at 20% minimum for a rental property. Changing the way that down payments work. They're potentially suggesting that you can no longer do borrowed down payment. We don't know if that means no refinancing to purchase or a home equity line of credit. It seems that it would probably be not using the home equity line of credit. And those are two massive potential considerations for people. Although I've got some thoughts and feelings. Let's do a little roundtable here, guys.
I mean, we'll see if they roll this out, when they roll it out, and if they, if they're going to actually implement these things. But if they do, I mean, there's typically going to be workarounds, right? Like if you have access to a line of credit, if that's your only source of down payment, draw it from the line of credit, put it in your bank account, turn that into a mortgage, right? You can look at using that down payment down the road as long as it's been in your account for a certain amount of time. So that's a way that you can try to work around it. In regards to, like, in my feelings on, the potential increase for down payment, they're talking about potentially going from a bare minimum 20% all the way up to 35% down for investment properties. Yeah, there are a lot of people that are just kind of scraping together the 20% to buy their first rental property. There's also a lot of people locally here, I'm just talking local because of what the market's done. There's a lot of people that have access to far more than they need. Then they have access to far more than 20% if it's coming from their home, right? Residential detached homes have appreciated like $300,000-$400,000 in certain pockets of the valley. If you qualify to get access to that equity, you're probably going to have more than enough, and you can probably still look at purchasing investment property. And because you're doing a larger down payment, you're going to have more cash flow, right? So there are still going to be a ton of people that are going to be able to purchase and continue to invest in real estate, in my opinion.
The other way to kind of look at this, and this is more of a house hacking tip that we've talked about a lot, where a client would buy their first home and then maybe 3 years later they buy their next home, which is also going to be their primary residence, and then they turn their previous home into the rental property. So that's one way to be able to plan. Again, it's back to planning. If we're having issues with home equity line of credit, it is just preparing. Maybe this is a 4 month down the road opportunity opposed to using the home equity line of credit right now for the down payment. So again, it's just more preparation and planning, I think, to really navigate this. So in my opinion, I think just with those, maneuvers, I think this is going to have very little to no impact. And you know what, like, back to investors having more capital, a lot of investors will prefer to put a little bit more down just from a cash flow perspective. If sometimes 25% will actually allow the property to cash flow versus 20%, this is more when rates are a little bit higher than they are now. But again, I just really don't see there's going to be much of an impact here. And it just seems like a poor use of government time.
So you mentioned you don't see a lot of an impact when it comes to being able to use the home equity line of credit. I would argue that where we would see an impact based on our conversations in the past here is if the down payment requirement was moved up to, say, 35% down payment compared to 20% down payment. Now, just to make sure we're on the same page on this one here, what I'm specifically speaking about is just the amount of people able to and willing to buy an investment property, not whether or not it makes sense at this point right now. So just quite the ability to do so. And is that going to impact supply and demand? So I mean, I can look at a number of my recent applications and suggest that if this individual's had to put 35% down, they wouldn't be able to do it. They wouldn't be able to come up with 35%. Obviously, that's almost doubling the down payment requirement on a $500,000 property. That's going up, almost coming up to $200,000 from $100,000 as an example.
But the nature of those people are going to buy something. So they typically, that just tells me they're going to buy something cheaper. And so that could just be, pushing further supply issues into cheaper real estate, which is ultimately going to affect the supply and demand for first-time homebuyers as well. Like a true investor is just going to find another opportunity with their budget. Like it's really just budgeting. Okay, I can't afford 600, then I'll buy 500. It's to me, I think the trickle down is going to be interesting.
The people that are listening to our podcast are probably the type of people that are going to find a way. Guys like you and I are going to find a way. We're going to look in different locations, look at different sources of capital. People are going to have to be creative. But what I do believe, and again, it will happen. I'd love to hear feedback from people listening to the episode of the show here. What do you think is going to happen? Send us a message on our Instagram page, or send us a voice note on our Anchor account here. Do you think that we'll be losing a lot of the quote unquote, junior investors, the first time investors, or are your thoughts that we're going to see, just generally speaking, a deflation in price points because all of these speculators are gone? So I'd love to hear some feedback from our listeners on that and see. Derek, any thoughts on this? You've been quiet over there.
I think, let's say this actually made a huge impact and people stopped buying rental properties, which it won't, but let's say that happened, right? There is still such a big market for people who are just trying to upsize or downsize or move, or like the first-time homebuyer market. The first-time homebuyer market was over 50% of all transactions in 2021 across Canada, right? So even if this did what the government wants it to do and there were no people buying rental properties, it's going to create probably a little bit more inventory. It might solve that problem a bit, but there's still so many people that want to get into the market that haven't been able to. I don't think this makes a big impact on the market as a whole or property values. I think it would probably solve inventory a little bit, but again, like it's creating a more of an issue for the rental market, people trying to rent homes, like Dean mentioned.
One thing I think we can all agree upon is whatever they decide to do here today, it's going to be a long time before we see any softening in the inventory market. And and again, I mean, I don't know if I can get into deep statistics in terms of how many people we're working with are investors versus regular home buyers. But that number, even though we work with a lot of clients who are buying investment properties, we still say that most of our clients are still buying properties either as an owner occupied or something of that nature as well. So curious to see where that goes and what happens there. Just some final thoughts here on some solutions going forward here, because again, we did just note that first-time buyers are the ones who have been most heavily impacted over the course of the last year based on statistics showing. I mean, all graphs show that first-time buyers are the ones who are getting impacted more than any other market, which makes sense because if we're in a major city center, like if you're in a Vancouver or if you're in an Ontario or I should say a Toronto or surrounding areas, well, price points have gone up and you didn't have the ability to leverage your equity to purchase that second property. So guys, any thoughts on what that might look like over the next year or two and opportunities for those people to think about?
Yeah, I mean, it's hard to say. We work with a ton of first-time buyers as well. And surprisingly, we actually see a lot of people getting help from family, right? I had a client that called me yesterday, actually. His dad sold his house, made a lot of money off his house, and he has helped out my client, his son, and son now wants to look at either upsizing or buying an investment property. So I think that's a huge component here. Like, yeah, is it scary to be a first-time buyer in our market? A little bit. You're paying $900,000 for a townhouse, right? But at the end of the day, I don't think you should let it deter you. If it's affordable, if it's a place that you are comfortable living, if you could see it as a long-term property, I think that you just need to get into the market, right? Especially like a big tip for first-time buyers, your first home is probably not going to be, you're not going to be head over heels in love with it. It might be a stepping stone property. You want a townhouse, but maybe only qualify for a condo, buy a condo. Right? Live there for 5 years, see what the market does for you. You could have some massive appreciation. You're going to pay down your mortgage, and hopefully you can look at upsizing down the road.
Being a little bit more creative is absolutely important. I mean, I'm just going to look back and at some of our notes from before. One of the things that we talk a lot about is, first of all, change your expectations on the market and what you can do. Remember, this is your first home. It's actually really blows my mind. I think there's too many people watching, what's that show? On HGTV. I don't even know what it's called, but the one where they're out there, House Hunters. There we go. And these guys look like they're, they don't even have a job and they're buying homes that are worth, $2 or $3 million in Vancouver for $100,000 in, some little place. A couple things to remember, folks. That show is fictional. It's not real. It's made up. Those people don't necessarily have to be the buyers. And the second thing is they don't disclose to us any information around how they got their source of money. So don't look at that. Don't watch that. Get in the market. The second thing I'd suggest people do is get a little more creative in looking at opportunities to venture with other people. Find a friend, find a roommate, find someone else that you want to buy with. We've had episodes in the past about joint venturing with people, and maybe we'll bring up a different conversation on that in the future, but that'll be a big one. Hey, there's no doubt it sucks getting into the market as a first-time buyer to a degree, but you got to find a way and you got to get creative if that's something that you want to do. As a third note, of course, we have seen salaries start to rise across the board. So hopefully, for that reason, we also see, people being able to qualify for a little more. I'd say on average, most of the first-time buyers that I see or work with are dual incomes. So we do see two people with two incomes, and they can afford to get in as a condo. I got into my first home, a very low, very, very, very entry level condo in an area I didn't want to be. And at the end of the day, made some sacrifices to get in. So I think a lot of people can probably set their expectations there. There still is an issue out there, but a couple pieces of advice I have on my end. Anything else on your end there?
Yeah, just start planning sooner than later, right? It can take you 2 years to get into the market sometimes, just with saving down payment and paying off a credit card and whatever, right? So just have the conversation as soon as you can. Do an application. It's going to take you guys like an hour, right, to do an application, send your documents in, and we'll build a really thorough plan. And best case scenario, you qualify now and you can act on something now. But if not, you've got a roadmap of what you need to do to get in.
Absolutely. So in summary here today, guys, a lot of this episode was definitely an update on what's going on Canada-wide, some of the areas that we've seen a little bit of surprise increase in price points, a little bit about what's happening in the rental market and proposed changes. This is really an opportunity or an episode where we want to just get some feedback from you guys. We want to hear from you. What do you think is happening? Why do you think it's happening? Do you agree with the proposed changes in relation to the CMHC policies? Let us know. Send us some information, some feedback. Our channels are as follows: at Thrive Mortgage Co. on Instagram, at the YVR REMO Show. Or if you go to Anchor, you can actually leave us a voice note. Last but not least, if you have any other questions or you want to find out if maybe you can get into the market before we see continued price increases, check us out online at thrivemortgage.ca. Click out the form. We'll reach out to you as soon as we can. Thanks for listening, guys. As always, have a wonderful rest of your day.